Good afternoon, friends. This video on Union Budget 2021, our expectation from indirect tax, mainly from custom and GST perspective. We all know that 2020 was challenging year for India and worldwide because of COVID-19. Union Budget 2021 going to be presented on 1st of February 2021. Our broader expectation would be it should be path-breaking budget, way forward budget on the vision of our Honorable Prime Minister, Make in India, Atmanirbhar Bharat, vocal for local. In this regard, the first suggestion would be the local manufacturer who are importing raw material, component or any inputs meant for manufacturing purpose. They are paying basic custom duty, social welfare surcharge and IGST. Credit of IGST available, but there is no credit for basic custom duty and social welfare surcharge, which we want either should be done away with or credits should be made available to create cost competitiveness versus pricing when we import goods. This is very much important. Otherwise, as an alternative, we can follow IGCR route, import of goods under concessional rate of duty for local manufacturing. And this suggestion is on the line of vision of our Honorable Prime Minister, Make in India, Atmanirbhar Bharat, vocal for local. There has to be cost competitiveness. My first suggestion. Second suggestion. We do not want any kind of double taxation when we look at custom law versus GST law. Very recently, one of the burning issue when we import on CIF basis, cost, insurance and freight, we pay custom duty including IGST. At the same time, the GST department is demanding IGST on freight component on which already we have paid IGST including custom duty at the time of import of goods. Question is, why double taxation? Department is saying credit is available, but there may be a case credit not available when we talk about import of exempted goods. And second, it is accumulation of credit in the hands of taxpayer. Working capital gets blocked. And ultimately, objective is no double taxation. Honorable Gujarat High Court, in the case of Mohit Mineral, already held that this IGST levy on freight component is ultra vires, but department has filed SLP in the Supreme Court. Matter is sub judice. Theme should be understood. Why double taxation? Third suggestion. There need to be harmonization when we look at transfer pricing, when we look at custom law versus income tax law. When we import goods for related parties, what we have seen that custom authority always look at increasing the price for getting more custom duty. Whereas income tax department doing contrary, they're reducing price to get more profit for income tax chargeability. When it is arm's length and it is being decided by one authority, it should be applicable to other authority as well, vice versa. There should be one transfer pricing when we look at custom versus income tax. Synchronization. Why unwanted litigation? Coming to the fourth item, we all are looking for the promotion of export. One contrary thing that now we are looking that foreign investment must come in India. So any foreign company want to invest in India, they will definitely do sales promotion and business development activity. If such activity undertaken by Indian supplier of service is not export, being intermediary services, hence GST leviable. So GST provision going contrary when we look at government vision and government policy. When we are inviting foreign company to put their investment in India and they want to get their business development activity done, sales promotion activity done, and that by Indian supplier of service, why it is intermediary. And this provision is a copy paste provision from service tax from 1st October 2014 should be looked into. The government vision and policy must sync with the taxation policy. Coming to the fifth item, we all know that GST and custom is interlinked when we look at chargeability for the goods. In GST goods rate notification 1/2017, there are around 1,208 products versus more than 12,000 products under first schedule to Custom Tariff Act. GST Council has principally decided that they are going to follow 4-digit HSN tariff unless otherwise carved out in 6 or 8 digit, and it is specifically provided by way of explanation Roman 3 and Roman 4 in goods rate notification. The GST going to follow the tariff item heading, subheading, section note, chapter note, general rule of interpretation, explanatory note of first schedule of Custom Tariff Act for the classification and rate chargeability in GST. But at ground level, since introduction of GST from July 1, 2017, we are finding lot many dispute has started coming in on classification and rate unless otherwise carved out into 6-digit and 8-digit. It would be 4-digit HSN classification as per first schedule of Custom Tariff Act need to be followed for all interpretation of GST goods rate notification 1/2017. Item number 5th, broader perspective. Refund. We have seen challenges. Refund we are not getting on time. And second problem with the refund is rate of interest. On delayed refund by the department is 6%, as against 18% rate of interest, which is to be paid by a taxpayer for delayed payment of taxes. Why there would be disparity? It should be at par. When department delaying giving the refund or when taxpayer delaying payment of taxes. Coming to the broader perspective, item number 6, 5 specified petroleum product is out of GST. Petrol, diesel, natural gas, aviation turbine fuel is a need and necessity of any manufacturing sector or service sector. So whatever taxes, which is pre-GST taxes paid on these 5 specified petroleum product, credit is not available in GST regime, creating cascading of taxes. Government must look into, in a phased manner, inclusion of these items into GST. Maybe start with natural gas, aviation turbine fuel, petrol, diesel. Coming to the last component, and which is very much important for our understanding. GST, we thought it would be good and simple tax. July 1, 2017 introduced. But with the journey of GST, 3.5 years, we are finding lot many challenges. It is coming out both sides, from the tax department side and from the taxpayer side. We need to have crystal clear a way forward path for GST. GST got introduced for the simplicity, good and simple tax. Maybe Union government can give and throw some light as a way forward, how the GST would be. This GST is really banking on for our growth and development, for GDP growth. We all need to work out. All stakeholders are equally responsible, either government, central or state, and the taxpayer. We need to create synergy of good and simple tax. These are the broad suggestions for Union Budget 2021. Challenging one, but definitely we are looking forward. Path breaking, way forward. Union Budget 2021 on the vision of our Honorable Prime Minister. Atmanirbhar Bharat. Vocal for local. Make in India. Thanking you. Thank you very much. Stay tuned. Thank you.